What's up, everyone? Today we're just gonna be doing a quick trade recap on this long that we just caught on ES or S&P futures during London session. So starting out, if you're on our Telegram, you would know that we were originally short. I believe it was this model, yep, on NQ. Obviously, it didn't end up playing out because we ended up respecting the hourly 5 minute and 15 minute buy side gaps that all fall in this kind of range here. Our targets were LROs or low resistance liquidity that hadn't been filled from New York session, and this is where we would eventually move stops to break even. And final target would have been New York low. Obviously, that would have been a bit greedy, but we would have probably only left a small amount of contracts running just with stops to break even just to see what we could get. However, we saw that the trade was respecting these gaps and was seeing some kind of bullish order flow out to the upside from this, and so we thought to just cut the trade at break even, and then which is where we kind of caught the reversal on ES. So what did we see for us to take the trade? Well, if we take a look here, which was the trade that we just got TP'd out at yesterday's high, what we managed to see was that we were respecting the hourly buy side gap, the 15-minute buy side gap, which price ended up tagging into and rejecting straight out of. Furthermore, we also managed to see a 15-minute inversion, which was this gap that created the fill of the fair value gap. The price was respecting it. We didn't see any closures below it, and then we started to see price kind of displace out of it. So then what we wanted to see was a 15-minute break of structure or market structure shift. As we can see, we were making continuous lower lows. However, we filled the gap, ended up displacing higher, making this 15-minute inversion, making a higher low, and then obviously that fill and then displacement higher ended up allowing us to see the 15-minute break of structure and market structure shift. Scaling down to the 5-minute, we also saw the same thing where we managed to see a 5-minute break of structure here. And we were respecting 5-minute gaps, such as this one right here, which then allowed us to obviously break structure. This was, sorry if I just marked that out. We respected this 5-minute buy side gap here, failed to invert it to the downside. And then we also saw this small 5-minute inversion here, which was obviously part of the break of structure. Furthermore, then if we scale down onto the 1-minute, which is where we typically tend to execute, after the 5-minute break of structure, 15-minute break of structure, we ended up impulsing higher out of the inversion, and then we ended up respecting this 1-minute gap here, and we saw what was it? Yep, sorry, we ended up entering at this 1-minute gap here after confirming that we were closing above all these inversions and gaps. And our TP was yesterday's high, so we ended up hitting a nice 1 to 1.85 risk to reward. On ES, this was all during London session, and now we are going to sit back, wait for pre-market to do its thing, kind of outline some draws on liquidity that we might see play out, because we do have all this low resistance liquidity here, and obviously we do have all this low resistance liquidity here going back down to this new week opening gap, which we don't think will necessarily get filled. But again, we do have FOMC tomorrow, so it's just a question of, are we going to continue to see pricing in of a 25 bips cut leading into tomorrow's event, such as seeing a repeat of yesterday's price action where we just saw a slow grind up in price? Or will we end up taking out a bunch of liquidity prior to the event, as kind of the trade seems a bit too free going into FOMC, and then mean revert to the upside on the event, having taken out a bunch of lows and displacing out of sell side liquidity and delivering higher? Right, so just quickly before we do wrap up here, a reminder that we do have a big rest of the week ahead, or the big rest of the trading week ahead, sorry. We have FOMC tomorrow, which markets are kind of pricing in a 25 bips cut. We have Trump and China expected to come to some form of result in terms of a trade deal. Obviously, that could be a huge bias dictator for the near future. And we also have huge amount of earnings this week from some of the largest companies out of the US. We have Visa, Microsoft, Google, Meta, Boeing, Apple, Amazon, Eli Lilly, MasterCard, Shell, and Exxon. This is all in the space of the next couple days.
See you in the next episode. Magnus out.